Hello, dividend executives. Welcome back. Another month has came and gone. We are on month 6 of this journey, investing in high yield dividend stocks with margin. So I want to talk about it. What are the numbers? How much margin did we use? How much interest did we pay? Was it worth it? Did we make more money than we paid in interest? And should I continue to do this? So let's jump into the numbers. Let's take a look at it. You guys know that right now I am doing this margin journey on some of our favorite round hill funds, and that is QDTE XDTE and RDTE. So let's jump into it. First things first, as always, let's pull up the Robinhood account and take a look at it. Looks like I'm already here on the dividends page. We have received over $340 worth of dividend income so far in February, and we are queued up to have another monster month, probably over $1,500. So here's all the dividends that have came in so far, and we are slowly but surely stacking it. But today we are going to be buying some assets, and we're going to be going over the margin journey that we have been sharing here on YouTube each and every single month. So let's take a look at it. This is out of a $37,000 high dividend yield portfolio, where my focus is to retire early off of this fund. It is very, very small now. We started 2 years ago at zero balance, and we are growing it to get to at least a $5,000 a month portfolio. And then I may start taking some money out. As for right now, we reinvest all of our premiums. We reinvest all of our dividends. We take zero money out, and we add new fresh capital every single week. So let's jump into the margin. Let's take a look at things. And the first things I want to show here is how much we paid in margin interest, right? So we come up here. Last month, we paid $37.21, and that was off of a 5.83% interest rate. And this month, the numbers just came in from January 7th to February 6th. This is our 6-month cycle. Average margin used $9,254.95, which is up from last month. And we paid $44.35 in interest at an average of 5.75% interest. So that being said, we had it was a pretty decent month. We went up in margin, we went down in interest rate, we went up in total interest paid, and the numbers look pretty good. Still, I'm interested in continuing to scale this journey. We're going to put our money where our mouth is, and we're going to continue buying more stocks, and I want to see how this goes. Now, I must say, anybody that's investing in margin, if you don't have the money to invest in margin, don't do it. And what I mean by that is at any moment I can transfer from my other brokerage account, or I can transfer my checking account, and I can cover the entire margin balance. If you can't do that, you need to be in a position where you can sell stocks to cover the margin. Margin is not for everybody. I'm using it to help turbocharge my dividend investing journey. If the numbers make sense, then I'm going to continue to grow it. If they don't make sense, then I won't continue to grow it, right? So far so good on the dividend journey. We're up 43% in the portfolio. So until the numbers don't make sense, I'm just going to continue scaling this. So what do we have on the table? Well, we have about $6,629 worth of buying power. It is mostly affected on the buying power because of all the puts we have on the table, right? So for every contract we have open here, for example, the Connell $26 put, that's $2,600 worth of capital. So our buying power could be much higher. We could use way more margin, but I like to sell cash secure puts, collect a little bit of income, and buy dividend stocks with that. So just an FYI on that, because we're going to jump into the margin here and how much I'm paying, and I want to be able to showcase that because that explains where we're sitting, right? So margin total right now is just under $30,000. Margin used, which is what I'm paying interest on, is $11,303.57. Options collateral is at $9,500. That is the money I have set aside for cash secured puts. And then the pending orders is this one right here. So this Connell put for $20, it is pending at $19.50 because obviously you're using $2,000 worth of collateral. You're making $50 in premium if it fills, and so that's why it's $19.50. And hopefully we get a fill there. And I am low risk. We have about a 39% buffer right now. If I closed all my puts, we'd probably be like 90% buffer. And we're looking really good there. So let's jump into the actual margin, right? So available margin, like we said, 6,600. Rate as of right now, 5.75. Now, if you use more margin, then you pay less in interest. But you have to get above that 50K threshold to even get the 5.55 and above 100K to get the 5.25. But I do get my first $1,000 of interest free with Robinhood Gold. So that is nice. There was $2,000 for a while there, but it is now back to $1,000, and we are continuing to take that free $1,000 every single month. So that's nice to see. And we're paying about $1.62 a day in margin interest. So not too bad. That is the stats, no smoke in the mirrors. That is where we are sitting right now. Now, let's talk about the stocks that I have, right? And so we went over the buffer, we went over the interest rate, we went over how much capital, we're about to go over how much capital we have invested in these, right? XDTE, about 9,200, QDTE, about 8,200, RDTE, about 7,200, and we're about to ratchet that up a little bit more. We'll talk about it when we get into spreadsheet Y, but for right now, we are going to throw a little bit more capital at these. So right now, 182 shares of XDTE, 9,100, about 18, almost 19% of the portfolio. Average cost of 51.92. So when I see an average cost higher than where we're at, that means it's time to buy. So I'm putting my money where my mouth is. I'm putting $500 into this. We're going to buy ourselves 9.9 shares, which ultimately is going to increase our drip. It's going to increase our weekly income, and it's going to increase our position in this. So now we are up to almost 20% of the portfolio in XDTE. Same thing with QDTE as well. 204 shares, 8,200 in this one. Average cost of 42.28, 16% of the portfolio. So we're going to come in here and we're going to buy ourselves 500 here. We're going to buy ourselves 12 shares. Boom, just like that. So 12.4 shares. So that's over 20 shares combined just in those two purchases, and then one more here as well. And the reason why I'm doing this is because the numbers make sense for now. So we're going to continue to invest as long as the numbers make sense, and I'm going to continue to build the portfolio. RDT, 177 shares, about $7,200 worth of market, and we're down about 4.8% total return here, but not total return including the dividend. All three of these are up in the green in total return, and what I mean by that is you take the total return on the actual stock and then you add in all the dividends you've been paid, and if that amount is higher than what you're down at this 4.8%, then you're up total on the investment. So we have to keep that in mind because that is the number that matters. And we want to be always looking at that. So the 12 shares are added there at the $40.59. We lowered our average cost, and we are ready to start stacking. Right. One thing I love to see here is watching this drip continue to raise. So if we come down here and we go to the history and we go to the dividends, look at this. I love watching this. I mean, look at this. 30, 30, 38, 36, 37, 32, 35, 24, 138, 131. Those were the special dividends that we got in December, and they absolutely cashed in. 49, 32, 61, 49, 38, 47. So really, really good dividends. They've been pretty consistent. We'll go over the averages here in a second, but just wanted to showcase this. No smoke in the mirrors. This is where we're spending our margin money. This is how much we paid, and I want to jump into the nitty gritty with you guys. So QDTE, on average, over the last 4 weeks, is paid 25 cents. All time, it's paid about 31 cents a week. So the last 4 weeks have been a lot lower. XDT, similar picture, but it's holding up much better. All-time average is 25.5 cents. In the last 4 weeks, 25.4. So it's right on base. We love to see that. Super, super consistent. RDT, a little bit more consistent. 26.8 cents over the last 4 weeks. 31.5 cents all time. So not too bad. These numbers are obviously before we just bought the 5 shares, but I have about $25,000 total in capital between all these. After the purchases today, obviously we're sitting about $26,000, right? So a little bit more capital there, but the drip has been dripping. Now I want to go over the numbers. These are the numbers that I said I'm not investing more unless the numbers make sense. So let's go over it. Date range on month 6 was January 7th to February 6th. So margin, we paid $44.35 in margin on the $9,254 worth of margin on average that we used. Our interest rate we used was 5.75. Quick note on interest rates, right? We did not get a rate pull down in January. As of right now, it's about a 95.5% confidence that we won't get a rate pull down in March. And then when we look into May, on May 7th, it's about a 77% chance that we will not get a rate reduction. So we've been playing into this theme that the rates were going to continue to come down. Right now, it looks like we are on a pause. By the end of the year, it's looking more probable that we'll get a rate reduction. I'm seeing about a 42% chance of the rates coming down 25 bips by July of 2025. So, and as you go on further into the end of the year, if we get all the way down into December, then we are talking about a much, much higher, only a 19.5% chance that we stay at the same rate by the end of the year. So the market is saying that there's an 80% chance by the end of the year we'll get at least one more rate cut. So that's good to keep in mind if you are using margin and if you are continuing to bring your margin interest up. So now back to total dividends. We had on average $23,568 invested in these three stocks on average. And what I did is I took my share count each week. You can see the formula here. And if you guys aren't using this spreadsheet already, any of the members in my channel and any of the Discord members get this spreadsheet, right? I have multiple tab spreadsheet. They're all available, but I think in here it's like what, $1.99 or something like that. But anyways, just want to say that. So you can see the formula below. We're taking the average between what we were paid, right? So we actually have a pretty accurate measure of how many shares we had, how much capital it took. So $23,000 capital, and we used $9,254, so about 39% was utilized, which means that of the $535 in dividends we received total from these three funds, only 210 of it was from the margin portion, right? So when you take our prorated dividends, which is $210, minus the margin interest we paid of $44.35, we are in the green on this $9,200 margin investment, $165.78. So that's the lowest one we've had so far since this journey started. So the numbers are trending down, but of course they're not going to be as good as last month because we got those special dividends at the end of the year. But I still like the numbers. The numbers are in the green enough for me to make it worth it. Even if you were to take out taxes on this, even though some of these are return on capital, even if you were to take out some additional taxes on the money, it's still looking good, right? So I'm going to continue stacking this. I'm going to continue increasing my margin usage until the numbers don't make sense. When they stop making sense, then I will just pay down the debt or I'll turn drip off and I'll just instantly let the portfolio pay itself off. So those are the numbers we're sitting at as of right now. Clear as day. Right now, so far, this journey has been really green. Now, let's talk about the actual journey on return on capital, right? So you can see since inception, we are number 6 right now. So 110 through 131 is the dividends we've received. We went from on QDT 177 shares up to 202 shares over that month period. And we dripped a lot of shares, right? We dripped ourselves, what, almost 4? Let me see if it'll let me do this. Sometimes it's finicky. Yeah, so on average, 1.1 a week, 4.5 shares on drip. So not too bad, picking ourselves up some nice drip. Another $181 total for QDTE of dividends over that month period. So that is nice to see. Slowly but surely, these funds are continuing to print. Total return, like we talked about, if you include all the dividends, which is $1,275 on QDTE, and the loss on capital, which is $438, we're still at about a 10% return on our capital because our total return is $837. So those are things to keep in mind. Total return green here, similar picture on XDTE, similar picture on RDTE, and even similar picture on YMAX, even though that's not part of the series. So those are the numbers there. There's no smoke in the mirrors. That's where we're sitting. And this is all the data for the dividends, right? You can see QDT is trending up, XDT is trending up, RDT is trending down, and then YMAX is trending down as well, but that's not part of this series. So that's one thing I wanted to share there. Last thing I wanted to share on the share count goals, right? I am going to continue adding to these shares until I am in a comfortable spot. And what I mean by a comfortable spot is we have, 46 weeks left in the year. Once these numbers right here start saying 46 or below, then I will stop buying shares. And what I mean by stop buying shares is I'll stop manually purchasing like we did today. I will just let the drips do their thing. Right now, we're dripping on average with XDE just over 1 share a week. QDT 0.73, RDT 0.87. So once I get to the point where my drip is going to get me to my end share count goal for the year of 250, then I will stop manually purchasing. Until then, we just have to continue to make more purchases. We have to build the drip up, and we have to go off the averages of what these funds have paid since inception, which we went over just a little bit ago. So that is my journey. So far, we are 6 months into it. And I love sharing the data. Hopefully this is helpful to you guys. Hopefully you are running numbers like this if you are using margin. Of course, as always, be careful if you're using margin, but so far it's working out well. So we're going to continue to add to it, and we're going to continue to build this dividend snowball. So thank you, everybody. I hope you guys found this content helpful. Hope you guys are enjoying this journey. I appreciate you for tuning in each and every single week. Don't forget to drop a like. Don't forget to sub. I appreciate y'all. Happy investing, and we'll catch you next time.